What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Monday, April 1st. Okay, guys, so SPY here today, really the S&P down 10 cents a share. Well, I guess SPY just down 10 cents a share, minus 0.02%, essentially a flat day here for the S&P 500. We, of course, this morning got a few different data points. We got U.S. initial jobless claims this Thursday, I'm talking about now, right? The last trading day of the week, heading into the weekend. U.S. GDP quarter-over-quarter final and the University of Michigan sentiment final. Now, just be aware that Friday, we will get, or got, depending on when you're watching this over the weekend, PCE, okay, as well as U.S. consumer spending month over month. Just be aware that Monday is likely to be heavily influenced by that PCE number. We're, of course, looking for cooler than expected. PCE, really core PCE, so we'll just let you in on this if you're not already aware. Core PCE is really what the Federal Reserve is looking at. When the Federal Reserve says that they have a 2% inflation goal, they're talking literally about core PCE. So, looking for cooler than expected. Let's dive in and take a look at SPY. We're going to do our best to pull out as much bias as we possibly can, utilizing the volume profile, the psychological levels, the areas that I expect a lot of trading volume to come in at here come Monday. We're also going to take a look at the options bias heading into next week and the expected move. Now, let's get started here with our daily ritual, our volume profile analysis here on the 5-minute chart. Here's where we try to pull out bias that isn't incredibly obvious simply by looking at the price action. This is like peeling back another layer of the onion, right? I'm primarily interested in this pop and drop that we got into the close, likely anticipating PCE. Really, the rest of the day, not a lot of movement to really dive in to the volume profile on, but let's take a look at this move. Now, we have to understand context, okay? We do expect ascending volume into the close, and, you know, truthfully, all this volume is very contextual, with the, I would say, one exception of higher than what is normal on that closing bar. For example, if we zoom out, we got a similar deal looking back here on Wednesday, okay? But over 6 million shares. This was actually quite, you know, a bull-heavy bias heading into the close on Wednesday. That's a lot of volume, though, heading into the close, you know, even for SPY. So it's worth considering. However, I need to make it clear that even though I think a lot of analysts would look at this and say, oh, that's a heavy bearish bias heading into the close, to me, I think this is a lot of algorithms and humans playing chicken with the closing bell and deciding, I don't want to risk the PCE tomorrow. Because, again, it's likely to impact come Monday, and we don't know what the number is going to come in at. And I think heading into that bell, you get a lot of market participants, even funds and institutions, saying, you know what, let's trim a little bit. I don't want to spend all weekend, Saturday and Sunday, and really most of Friday, worrying about our SPY position if, or really, you know, any position in general, whether this be driven by big blue chips or whatever that may be, the entire weekend if PCE comes in bad. So they're kind of playing chicken and then they chicken out and bail. But that's really all we can pull out of the 5-minute here. So let's move on to the psychological levels that I think the whole market's going to be paying attention to come Monday. I am especially paying very close attention to all of this. So this is the 30-minute chart with the 50-period moving average, an incredibly psychological and self-fulfilling prophecy combination here with a lot of eyeballs. And you know, we look here and we closed essentially bouncing just off of a test of that 50 period here on the 30-minute chart. Again, a heavily psychological level. It has a ton of eyeballs. Come Monday, very simple here on the 30-minute. Bears, you want to see a downside crack below that level, spending, you know, as much time intraday below that 50 period on the 30-minute as possible, with ideally seeing a crack downside on high volume, a retest on lower volume to show a lack of confidence in the break back upside, right? And then confirmation with a high volume rejection off of that level. That shows short-term confirmation of a resistance level, and that can open you bears up for a downside test of the 200 period. Whereas you bulls, I just want to see that thing hold, right? We held it into the close. Take after hours with a grain of salt. Volume is incredibly low. I'm looking at this close. Okay, now again, a lot of this is likely to depend on the data that we get over this long weekend here on Friday. But even regardless of data, okay, the market will work itself out. If I'm a bull, I want to see that 50 period hold as support come Monday, spending, ideally the whole day, but if not, as much time as possible above that 50 period as we can. Any downside test, holding that as support on high volume. All right, let's move on now to the 4-hour chart, and you can see here that this is actually, for me, the last week or so, this is a relatively healthy 4-hour chart. I like the way that this 50 period is grinding upside. We've reclaimed, $500 on the 50 period quite a while ago. All right, that currently is claiming $5.20 a share, and it's staying within a couple of points of SPY. That's a good thing to see, because you always want, if you're a bull in this case, right, you want as many psychological barriers staying close as possible, so that with any downside movement, you're never too far away from a psychological hangup. In this case, that 50 period on the 4-hour chart is one that has a ton of eyeballs, and a lot of people are paying attention to, funds and institutions included, because of that self-fulfilling prophecy mentality. This is good to see. Listen, any downside test, though, bulls, you're going to want to see that 50 period hold. You're not going to want to see it give up like we did back here on March 15th. That can start to get ugly, at least intraday. Just a nice clean hold on an ascending 50 period is what you want. Whereas bears, your primary goal here when looking at the 4-hour is to crack this 50 period to the downside on big volume as quickly as possible. All right. Now, the daily chart. Look at how healthy this looks. It's a grind higher for sure, and it has been a big move in 2024. Well, really late 2023 through 2024, but it has been such a tight channel and such a clean move. I mean, we're gonna break out of this tight channel eventually. It's gonna be interesting to see how that happens. But where we currently stand, that 50-day moving average just recently cracked $500 a share in the last few trading days, really in the last week. That's good. Right, and we now have an additional psychological barrier, and believe me, the 50-day on the daily, or the 50-day, right, has a ton of eyeballs. This is one of the most heavily watched charts in the world, in the entire world, this right here. But, from that 50-day, the stock, or the ETF more so, is 3.7% to the downside away from that 50-day moving average, so it's not, 0.5%. That's a relatively substantial move in the S&P. Now listen, now that we're on the daily chart, we can talk about some of the things that happened today. Today was a big deal. All right, if we zoom out, you can see we hit an all-time high intraday, 524.61 here on SPY. Okay, today was also the end of Q1, the last trading day, I should say, of Q1. So the S&P hit its best start to the year since 2019. That's reasonably important to consider. And additionally, if we take all that information now and we look back at the 5-minute, this starts to make even more sense, right? When we consider that, okay, well, today was the last trading day of Q1, so funds and institutions are going to be doing some rebalancing. That's just natural. And that makes a lot of sense, okay? So that adds even more context to that. But if we look at the daily, which is, I think, by far the most important chart, and we really think about this here contextually speaking, what's the story on Monday? Well, to me, I think this is really kind of a battle with 520 kind of being a bearish target to break, okay? And 525 being kind of that bullish target to break to the upside. The high of 524.61, yes, that's the high, but in my opinion, in my experience, I suppose, it's too specific. Like the exact penny, like 525 is a psychological level that also notches a new all-time high, and getting above 525 and holding above 525 and kind of using 525 as like a trampoline to start to even push a little higher, that's a big power move out of bulls come Monday. Whereas, you bears, downside tests of 520, a downside break through that level, that would be a good thing for you guys to see come Monday. Okay, now, a couple more things here that we can use to pull out some information. Expected move. Of course, on SPY, we have expirations very often. In fact, in recent years here on SPY, it's each day of the week. If you guys remember, if you've been trading for minimum a couple of years, it started with expirations each Friday. Well, it didn't start. That was the integration of more frequent expirations, the weeklies, right? The Monday and Wednesday expirations got added over time. And, I mean, if you got started trading recently, you don't realize how spoiled you are to have expiration dates every day now on SPY, 5 days a week. And, the liquidity in SPY's chain is just unmatched. It's incredible. You're very spoiled if you started trading just recently, believe me. And I'm talking like just in the last few years here, it has improved greatly. But for April 1st, which is Monday, at the close, we can actually get some great information here. The expected move, now that's a technical term. This is actually priced from the market, from the implied volatility at that particular expiration. The expected move from the options traders come at the close on Monday in SPY is plus or minus $2.73 per share. Now, you can't expect the world here. We have to piece some things together. The chain, the expected move, that gives us not a directional bias, but a volatility expectation. Okay, plus or minus $2.73 per share by close on Monday is the expectation. So that tells us that the options traders are actually expecting SPY to be down close to 520, right? That's the one standard deviation expected move, or as high as a new all-time high. And that's very important to understand what the market expects in terms of volatility, because once we start analyzing and doing the volume profile and the psychological levels, and then the last piece that we're going to do here, then we can form our own directional bias coupled with the volatility expectation. We become much more effective traders that way, right? By understanding what the market expects and then playing against it. So the last thing that we can do here, the options bias here on Thursday. Heading in the next week. Over 7 million contracts traded. That's a good sample size. We can get some great data out of that, but look at this. 2.7 million of those were calls. 4.4 million of those were puts. But we can go one step further. Let's break it down by time frame, right? The 0 to 20 delta range. If you're not sure what that is, those are the furthest out of the money contracts with, on average, the shortest expiration dates. So those are the shortest term, most aggressive bets being placed, which fits our context of this video and most of the videos on the channel, which are, day-to-day shorter term analysis videos, which I think, in my opinion, I think the market could greatly use. I enjoy doing these. By the way, if you haven't done so already, please subscribe to the channel. It helps out tremendously, more than you'll ever know. But that gives us a really short-term bias out of the market. Look at this. This is wild here. 789,000 calls, 2.74 million puts. Now listen, this is just one factor of many. But we're seeing an overall put side bias in SPY here on Thursday heading into Monday. This is how traders are positioning themselves heading the next week. And a heavy short-term put side bias here in SPY. It seems that the short-term speculators, those gambly style bets being placed, it seems that the majority, they're betting against this all-time high, which is interesting. Let me know what you think down in the comment section. I'm very curious to, get a big sample size opinion, as many opinions as possible. I want to hear what you guys have to say about this. So listen, if you got value out of the video, again, subscribe to the channel, helps out tremendously. I appreciate it, and I'll see you in the next one.